Hi team, wish you happy new year to all the subscribers, to viewers. How can we grow money or how can we grow our personal finance in 24 is the idea of this video, and this is my personal view only. I'm not SEBI Registered advisor. Do your own research on your financial investments. So when it comes to how to grow money, my first choice in 24 would be real estate, and then followed by gold, and then followed by keeping some cash to invest in the equities. This is all apart from emergency funds and daily needs. Because if you look at in 23, Indian equity markets has given stellar performance. It's one time in a 5 years or one time in a decade. It's not like a regular returns. The people who has invested during Corona or before Corona, like 2008-10, they are only getting benefited now. Within 1 year, no one has not get benefited. So if you look at CNX 500, it has given 4,000 points up, and Nifty has given 19% returns. Bank Nifty has given 11% return. Mid cap has given 44% return. Small cap has given 46% returns. So these are all stellar performance. While at the same time, gold has given 13.55%. So now my view is, as in 24 major countries are going to election like UK, India, US, there will be definitely some uncertainty or there will be some policies delay, so which will pause growth economically before coming to new policies or new governments. So that's the reason I'm choosing real estate, then followed by the gold. Because already, due to this interest rates and all everything, central banks already accumulated gold and they will continue to accumulate gold because of these elections. And then there are some wars and clashes across the globe, which is not in last 20 years. So in last 2 to 3 years, this same Ukraine-Russia war is going on. Some Israel, Gaza, or maybe West Africa, different locations, different issues are going on. But market has discounted everything now. But in future, again, they might show the same reasons to come fall down if there is any worse situation. So that's the reason in Indian market, real estate is different than any other country. See, in India, in a cut short, in India, before COVID, the home loan interest rates are, say, for example, 9% or 9.5. During Corona, it went down to 5.75 or 6%. But now, again, today, it is 9%. So we are just rolled back to the same. But only thing is our assets has been increased. I mean, real estate prices has been increased. The persons who has got 30 lakhs, 40 lakhs flats in 2014-15, now the same flat has become 70 lakhs as a new flat or 80 lakhs. Even in Mumbai, it will be 1 crore, 2 crore, 3 crore, something like that. Whereas Western countries, pre-COVID, the interest rates were, say, 3% or 1%, 2%. But the same rates has been increased to 6%. So the clear-cut interest rate hike. And even Western governments are today struggling to spend the money over the public. So that's the reason the Indian real estate market is different compared to any other country. In Indian market, we can do new real estate ventures on people. They can build the homes on their own and all. But in outside countries, it's not like that. That's the reason. And then the second point is gold. So as I said, gold has given a less return compared to, in fact, standard return, that is, compared to equity performance. So I prefer real estate, then followed by gold, then keep the cash for emergency, because 24 is going to be more layoffs. People are saying that, but we don't know what will happen. But still have some emergency fund and then overall above, if there are any dips or gap downs, then whatever I convinced in equities, then I will start to invest that. Or else in a simple way, whenever there is any 72% dip, I will accumulate only top 5 stocks, say Reliance, HDFC, ICICI, SBI, TCS, something like this, Tata Motor, Maruti, something like this, because they might give at least a 5%, 6% bounce back immediately as index recover. Or maybe ETF also is one of the way, or mutual funds, then followed by insurance. That's how I want to segregate that. Because if you look at this real estate also, here, if you look at that, so it has broken out almost after 13 years. Say 2009-10 was the year when high, and again in 23 it increased. I mean, it has given the breakout. So it has a long way to go now in real estate. Even if you look at the stocks like say DLF, now it is around the 723. See, in 2008 this price was. See how it has been, you know, rallied, especially after 400. Immediately it has been rallied. Even if you look at that, there is some Shoba developers or something like that. Loda also is one of the real estate. See, but this is very recent one. You can see that. You have say TTK Prestige. This is also one of the real estate stock. If you look at that, it also has been rallied in 2020, but I think now it is in falling that. Say we have Godrej Properties. See, it has also rallied quite a lot after 2010. Now it is in a recovery mode. Yeah, you see Soba developers and say something like Keystone Realtors. These are all new but still growing good, even as a standard NBCC like a PSU. So all these are started rallying in real estate side, infrastructure side. So that is the reason I'm looking on that real estate front, and that too, it is in India good to easy to buy the land PLOT plot compared to Western countries. So keep your priorities also in check and do your own research before investment. Don't take my advice. Thank you.